Greetings, guys. Welcome back to the Wealth for Real YouTube channel. I'm Christopher Anastasio. It's Friday, April 14th, 2023. And I want to make you guys a quick video about how Bill Ackman, billionaire hedge fund head, basically called the 2008 financial crisis. His team, Pershing Square Capital Management, basically was way ahead, at least compared to most people, of that crisis, and was analyzing certain things in the credit markets and stuff way ahead of everybody else. I was inspired to look at this thing I'm about to show you guys by watching this movie right here, Inside Job from 2010. It took me forever to actually get around to watching this movie. I literally watched it a couple weeks ago, so it took me 13 years. Can't believe it took me that long after being so invested in this thing and wanting to know what happened in 2008 and how it happened. It's just amazing that it took me 13 years to watch this. But a lot of things came out of this that I wanted to watch or read. Glass-Steagall Act, Commodity Future Modernization Act, Dodd-Frank Act, this thing that I'm about to show you guys from Ackman's team. So anyway, that's the genesis of this video and this thing I'm going to show you guys. If you guys want to watch this movie, it's outstanding in breaking down that financial crisis. But anyway, you can also read more about Ackman and stuff on Wikipedia there. The point, guys, is this analysis that they did in May 2007 of who's holding the bag, just an absolutely incredible breaking down of credit market trends, growth in easy credit. What did securitization do to us in terms of like packaging up mortgage loans and selling them and stuff like that? And then who's going to be left holding the bag? So I've got this thing. I actually got to page or slide 28, I think it is, 26, 27, 28. And then just the way I like to read stuff, I've printed the thing off, and I'm going to be going through the rest of it this weekend. But a couple of interesting things for you guys in here that I want to kind of lay out and point out so far. And if you guys are interested in this, I would just back up and say, if you guys are interested in the 2008 crisis, if you're looking for what's about to happen in the next crisis, if you're trying to peel that back and get ahead of that in any way, shape, or form, these are the types of things I think we need to look at closer. Is, who was sounding the alarm last time? Were they right or not? Now we can audit them and see if they were right about what they were saying or not. Right? We've had the benefit of now with this thing 16 years of hindsight, and then we can look and see what they're saying now. And we can look for clues in the two crises. What regulations were or weren't tightened up, what laws were or weren't passed. And we can kind of piece all this together and say, okay, the next crisis kind of looks like this and kind of looks like it's going to happen this way. It's never going to be the exact replica, but it's going to have similar fractal, as Taleb would put it, fractal patterns to it, that if we sense those patterns, we can interpret and sort of extrapolate for the next thing that's going to blow up here on us in probably the next year or two, is my guess. So in Who's Holding the Bag, I showed you guys the agenda here. What Ackman's doing here, and again, I've only gotten through 28 or 27 of these slides. I got to finish the rest of this. He's talking about the credit market dynamics. He's showing relaxed lending standards, financial innovation using these weird mortgages with adjustable rate mortgages and interest only and stuff like that. Second liens, he's showing how home price indices that break above the 30-year trend line always result in a recession. It did it in 1981. It did it in 1990, and it's going to do it again. He was correct in this call in 2005 that it would lead to a recession, which happened in 2008. Asset-backed security, liquidity for originators. He's breaking all these metrics down. Kind of lost me here a little bit on how securitization works. I like all these charts in here. I just don't know what it was talking about. So I'm going to have to do some research on that. But this is interesting, guys, how mortgage lending was done in the old days. Okay, these characteristics of mortgage lending. How it's done today, meaning back in 2007, lending and securitizing, selling off mortgages, moral hazard. Even the ratings agencies are in on this problem. So he talks about all this stuff here and really breaks apart these characteristics, senses the whole rating agency or not regulators thing. You know what I mean? Rating agencies claim no liability for being wrong. I mean, just really pick these guys apart way before their reputation blew up, 2 years later, 3 years later, that sort of thing. So one of the things that was really interesting here, guys, I want to see, there was one thing I really wanted to show you guys. I may have skipped past it. Yeah, I think, okay, this is probably the biggest. I'll come back to this chart here, guys. This home price index breaking above the 30-year trend line. This is something I need to research, and I need to make more videos for you guys about. And by the way, I will be making more videos about this presentation itself because it's just too big and too weighty to only capture in one video. But this is where I really wanted to see, like, okay, so he got this right? The housing market broke above the trend line. It collapsed a couple years later. I mean, the housing market bottomed in 2011, if you want to be technical about it. So the recession occurred in 08, the stock market crashed and everything, but then the housing market bottomed in 11. So I want to see, like, where is this trend line now? How disjointed is this now? It's got to be pretty disjointed, guys. I mean, look at what happened in 2021 with housing prices and post-pandemic dynamics and stuff like that. So this is really, really interesting to me. This is a chart so far out of the 27 I've looked at that really caught my attention, and that I wanted to highlight for you guys. And then there's just other interesting stuff in here, particularly the way mortgages get packaged and securitized. I don't think anything's changed about this. I think we're still taking on this inherent risk here. And then the ratings agencies, I mean, just like picking these guys apart, like, I mean, look at this quote from Standard & Poor's, guys. Investors mistakenly assume that a credit rating represented advice as to whether they should buy, sell, or hold a security, or that they could rely on a credit rating agency as fiduciary, neither of which is true. Like, I mean, this is Standard & Poor's saying this in 2002, before everything exploded, 6 years later. So anyway, guys, I don't want to belabor those points too long, but I wanted you guys to kind of see this and realize this thing is out here, and the movie as well. So I think, if you said, okay, Chris, what's the takeaway here? I'd say, number one, watch this movie if you haven't watched it. Watch Inside Job. It's going to really lay out that 08 crisis very cleanly, very nicely packaged for you. It's very digestible. I mean, I don't understand these concepts very well once things get super technical, but this movie absolutely hit the mark in helping me redigest what happened 15 years ago. That's step one. Step two is there's going to be a lot of stuff mentioned in this movie that's worth looking at analysis-wise. People who got things wrong, people who got things right. And I would say start with the things that people got right, some of the people who are talking in this movie and really had their eye on the ball. And then sub to that, Bill Ackman, and this briefing, this presentation I just showed you would be a great place to start, because Ackman has been vocal now about the coming crisis. He got it right in 2007. There's some really, really good analysis in here, guys. I suspect that there are things in here that are no different now. They haven't changed. They're going to happen the same way. Or even if they change, you're going to see some of the same patterns emerge. So that's what I would recommend, guys. Now, if you don't want to read this or you don't want to look through it, I am going to be talking about it more and more as I dig through it. Like I said, I'm only about a third of the way through it, maybe 40% of the way through it, and I'm going to be talking more about it. But then sub to the Ackman thing, this is where I'm really fixated, guys, is on this this chart right here. Increasing asset values. We know this has been happening now with the housing market getting way out of line, and then the whole thing with now interest rates suddenly tightening and sort of making this thing fall off a cliff. We know it's going to fall off a cliff. We just don't know by how much. So that's where I'm kind of focused right now in terms of the slides that I've reviewed so far in this briefing. So I want to end this video here, guys. More to follow on Ackman, more to follow on this who's holding the bag presentation. Definitely looking forward to sharing that with you guys. And if you guys have any comments or questions, I would love if somebody's read this thing, or you guys do read it and you want to comment, or you have a question for me about it, or you can help me understand it. Would absolutely love to hear from you guys here in the comment area. And of course, if you haven't yet, would love it if you hit the subscribe button. Okay, thanks, guys. Hope everybody has a great Friday and a great weekend.